to AMC's fourth quarter and full year 2024 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, and free cash flow, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everybody, and thank you for joining us today. What a superb quarter AMC just completed, especially so in November and December of 2024, thanks to hit movies like Gladiator II, Wicked, and Moana 2, which pushed Thanksgiving patronage at AMC across the United States to the highest AMC has ever seen in our 105-year history. And Mufasa the Lion King, along with numerous other titles, gave us results in December that were just stellar as well. AMC revenue in the fourth quarter was up 18% year over year, and our adjusted EBITDA of $164.8 million was more than triple. May I say that again? Our adjusted EBITDA was more than triple the adjusted EBITDA that was reported for the fourth quarter a year ago. We handily beat consensus estimates for both revenue and for adjusted EBITDA in the fourth quarter of 2024. Importantly, AMC generated more than $200 million of cash from operating activities and $114 million in free cash flow in the fourth quarter. It was our highest quarterly cash flow post-pandemic. These results underscore the continued progress that AMC has been making as we continue on a road to recovery, buttressed by a growing lineup of consumer-appealing movies opening exclusively in movie theaters. More than 62 million guests visited an AMC theater worldwide, AMC here in the United States, Odeon in Europe, and our operations in the Middle East, in the fourth quarter of 2024, marking a post-pandemic fourth quarter record for us and an impressive 20% increase in attendance compared to the fourth quarter of 2023. Complementing this fourth quarter attendance milestone, moviegoers enthusiastically embraced the variety and quality of our food and beverage offerings, driving food and beverage revenue per patron to $7.15, an all-time fourth quarter record for AMC ever. All those quarter-over-quarter improvements are especially noteworthy given AMC's incredibly high market share and the resulting strong financial performance that AMC enjoyed in last year's fourth quarter, specifically due to our distributing Taylor Swift's The Eras Tour movie and Beyoncé's Renaissance film in October, November, and December of 2023 to great acclaim. Looking at the full year of 2024, AMC welcomed some 224 million moviegoers to our theaters across the globe. and those moviegoers gravitated toward our premium experiences, to our largest screens, our best projection technologies, our most immersive sound systems, and our luxurious seating. Accordingly, we are pleased to report to you that for full year 2024, AMC achieved all-time per-patron result records on several key metrics: an all-time record for admissions revenue per patron, an all-time record for food and beverage revenue per patron, and an all-time record for total revenue per patron. Another crucial accomplishment during 2024 was AMC's continued successful strengthening of our balance sheet. Sean will provide more details in just a few minutes, but suffice it to say that our balance sheet is meaningfully stronger today as a result of the significant actions that AMC took during the year to reduce our debt, to lengthen our debt maturities, and to bolster our cash reserves. 2024 was truly a year of two halves. The first half was heavily impacted by Hollywood's long strikes of 2023, followed by a resurgent second half driven by an increase in new releases and an overall stronger film slate. The domestic industry box office, which is kind of the basic measure of the size of our industry, which was only $3.6 billion for the first 6 months of 2024, soared to $5.1 billion in the second 6 months of 2024. Much, much stronger than the first half by orders of magnitude. The second half turnaround was certainly eventful, with a number of long-standing box office records being shattered. Notably, in the second half, the movie industry saw the highest grossing animated film in history. It saw the most successful R-rated film of all time. It saw the highest grossing musical film adaptation of a Broadway musical of all time. And as I said earlier, we at AMC enjoyed the biggest Thanksgiving weekend box office ever. Looking at all the progress made in the latter half of 2024, it seems to us that it's clear that our industry finally is getting healthier. We're still not where we want to be. We're still not where we need to ultimately be. But real progress has been and is being made. And looking to 2025, the current year that started less than 60 days ago, at AMC we are highly optimistic that the box office for this new current year will feel much more in line with that of the robust revenues of the second half of 2024 as compared to the anemic revenues of the first half of 2024. Early projections indicate that the number of wide-release films in 2025 could increase by approximately 17% compared to the number of wide-release films of 2024, representing yet another significant step toward ultimately getting to pre-pandemic output levels and another cause for our optimism that the box office will materially rise in 2025. During this current new year, we anticipate the box office will strengthen with each successive quarter. Historically, Q1 has been the quietest period of the year, and this year is likely to be no exception to that long-standing trend, driven by seasonal consumer behavior and studio release patterns. But following Q1, we believe the box office is set to heat up, with Q2 poised to significantly outpace the first 3 months of this year. As we transition into the heart of the big summer movie season, Q3 looks to be a vibrant summer for moviegoing and, importantly to us, for AMC. And then we hope to close out 2025 big, with a wave of highly anticipated franchise sequels, including the second part of Universal's highly successful Wicked, Disney's Zootopia 2, And what can you say about this film, the next installment of James Cameron's mind-bogglingly successful epic saga, Avatar? With the potential for each quarter in 2025 to build upon the last, we currently estimate that 2025 domestic industry box office could see a $500 million to $1 billion growth compared to 2024. And remember that given AMC's historic market share levels, about 2/9 of any heightened box office should flow straight in the direction of AMC Entertainment. With that as a preamble, and I'm going to come back a little bit more to talk about some initiatives now underway at the company and some thoughts on our recent performance in the markets, let me turn the call over to our Chief Financial Officer, Shawn Goodman. Shawn?
Thanks, Adam. Thanks, everyone, for joining us this afternoon. Indeed, the fourth quarter once again did prove that movie-going demand is robust when compelling content is available on the big screens. During the quarter, we welcomed 62.4 million guests to our theaters around the world. This is a post-pandemic fourth quarter record that exceeded the prior year by some 20%. And not only did we achieve an attendance record, we also achieved all-time fourth quarter record food and beverage revenue per patron of $7.15 and our second highest fourth quarter admissions revenue per patron of $11.56. As a result of this, we registered fourth quarter post-pandemic records for both total admissions and total food and beverage revenue, and our overall revenue grew 18.3% compared to the fourth quarter of 2023 to hit a post-pandemic fourth quarter record of $1.3 billion. Our results show that the continued focus on enhancing the guest experience, growing profit per patron, and overall operating efficiency are indeed yielding results. Our revenue per patron is now approximately 34% higher than it was in pre-pandemic 2019. This is driven primarily by growth in food and beverage revenue per patron of 51%. The success in food and beverage revenue per patron is a result of our market-leading initiatives, including collectible movie-themed merchandise, specialty cocktails, menu enhancements, and mobile ordering technology. When comparing our results to the fourth quarter of 2023, it's important to note that comparisons may not really provide the full picture. This is because you may recall that in the fourth quarter of 2023, AMC distributed the highly successful concert movies Taylor Swift, The Eras Tour, and Renaissance, a film by Beyoncé. These concert movies had special event ticket pricing and generated higher than usual food and beverage revenue per patron associated with high demand collectible concession items. So, while the fourth quarter admissions revenue per patron declined by approximately 2.4% compared to Q4 2023, when we normalize for the impact of the concert movies, admissions revenue per patron actually increased by 3.2%. Likewise, food and beverage revenue per patron appears to be only slightly ahead of the fourth quarter of 2023. However, when we normalize for the impact of the concert movies, food and beverage revenue per patron saw an increase of approximately 2.8%. And while we are discussing the impact of last year's concert movie events, we should note that AMC recorded domestic market shares in excess of 35% for these two movies in 2023, and this makes market share comparisons somewhat difficult. Now, when you couple our fourth quarter 2024 revenue records with our focus on efficiently delivering the best possible guest experience, adjusted EBITDA increases from $47.9 million in the fourth quarter of 2023 to $164.8 million this year. That's an increase of more than 240%. And these results were achieved in both the domestic business where adjusted EBITDA more than tripled to $123 million, and the international business, where adjusted EBITDA increased more than fourfold to $41.8 million. These results are a clear indication of the operating leverage inherent in our business. Revenue increased by 18.3%. This led to an adjusted EBITDA increase of 244%. This operating leverage is another reason to be optimistic about AMC's future as our industry continues along a recovery trajectory. Okay, let's now move to a discussion about cash flow and the balance sheet. A highlight of this quarter is cash flow. We generated $203.6 million of cash from operating activities and $113.9 million in free cash flow. These are our very best cash flow numbers since the fourth quarter of 2019. And we ended the quarter with cash and cash equivalents of $632.3 million. It is worth noting that historically we generate cash from working capital during the second and fourth quarters, and we tend to use cash from working capital during the first and third quarters. This pattern will of course depend on the timing of film releases and the pattern of audience attendance during holiday periods. But during the fourth quarter, we benefited from strong cash generated from working capital that we expect will largely reverse in the first quarter of 2025, when many payments related to the successful fourth quarter are made. Talking about cash flow, CapEx net of landlord contributions was $83.9 million in the fourth quarter, and this brings the total net CapEx spend to $213.7 million for the full year 2024. We expect CapEx in 2025 to be in the range of $175 to $225 million. From a theater footprint perspective, during the fourth quarter, we added another one new high-performing theater, and we permanently closed 3 underperforming locations. So this brings the total number of locations permanently closed since the pandemic began to 192, and the total new locations opened to 62. So this represents a net reduction of 130 locations, or approximately 13% of our locations at December 31, 2019. And we continue to see that the 62 new locations very significantly outperform the 192 closed locations. Going forward, as we review and rationalize the theater portfolio at every opportunity, we'll continue to invest in our circuit to enhance the guest experience. Note that the deferred rent balance at the end of 2024 was approximately $37.6 million, and we plan to reduce this balance by another approximately $8 million during 2025. From a capital markets perspective, we were once again active during Q4, continuing to strengthen our balance sheet to position the company for sustainable long-term success. During the course of 2024, we have reduced the principal balance of our debt and finance leases by $375.9 million. We have extended the maturity of approximately $2.4 billion of debt that was due in 2026 to 2029 and beyond. We've raised approximately $262 million of gross proceeds from the sale of our Class A common stock. And in addition, last month, January, we received $171.7 million as initial cash proceeds associated with the establishment of forward positions for 30 million shares of our common stock, plus at-the-market offerings of 17.1 million shares. Strengthening the balance sheet is a priority, and since the beginning of 2022, we have lowered the principal value of our debt and finance leases by more than $1 billion, and we've also repaid $277.5 million of deferred leases. This brings the total debt that we've reduced over the period to $1.34 billion. These actions have been made possible by our ability to raise equity capital, which has been essential to our survival and has undeniably strengthened our balance sheet and positioned the company to capitalize on future growth opportunities as the film exhibition industry recovers. The outlook for the industry box office in 2025 and 2026 appears to be increasingly promising, and we are confident that the strategic and operational actions that we have taken and will continue to take position us very well for the future. And now I'll hand the webcast back over to Adam.
Thank you, Sean. On our last quarter's call, we introduced the notion that after 4 grueling post-pandemic years, it was finally time for AMC to get off our heels defensively and instead to play on offense once again. So on this call, I want to give you an update of the activity already underway for AMC to go on offense. Specifically, AMC's Go Plan, GO, Go on Offense, set in motion a series of initiatives designed to leverage our strengths and accelerate our recovery. Aligning with our expectations for a rising and more consistent box office over the next several years to come, it makes sense to try to grow your revenues when revenues are in fact growing. With a central theme of improving the guest experience inside our theaters, the AMC Go Plan is multidimensional and designed to drive additional profitable attendance to our theaters, to AMC in the U.S. and Odeon abroad. With our industry-leading per-patron metrics, which, as you know, hit record levels in 2024, what's so important about this drive to increase and bolster our attendance is that every incremental guest in our theaters is not only valued, but it drives a huge percentage of their incremental revenue down to the EBITDA line. As more capital becomes available to AMC to invest in growth initiatives, one key aspect of the AMC Go Plan is to add more premium experiences. Capitalizing on the fact that AMC today is already, without question, the global leader in offering premium large format screens. I can say to you today that in calendar year 2025, and again in calendar year 2026, we currently expect to upgrade more of our IMAX auditoriums to the very popular IMAX with Laser. We intend to add more Dolby Cinema screens. We intend to add more Prime at AMC screens, our so-called house brand PLF format. We also intend to bring our successful XL, or extra large screen concept that was launched in Europe last year to the United States. We would hope to introduce between 50 and 100 XL screens in the United States this year and add another 150 XL screens in addition in 2026. Our rollout of Laser at AMC screens with their brighter and sharper picture on the screen resulting from laser projection continues apace. It has already been installed in about 1/3 of our U.S. screens, and we will be adding a great number more of laser projections to AMC theaters, both in 25 and in 2026. Another part of the AMC Go Plan is to improve the seating comfort and appeal at more of our theaters, especially at ones that are already quite profitable and well attended. Recent luxurious seat replacements at AMC Burbank 16 in Los Angeles, along with AMC Lincoln Square 13 and AMC Empire 25 in Manhattan, have led to dramatically improved guest satisfaction scores and, importantly for us, high theater gross seats. In fact, just a couple of weeks ago, on a Saturday night, out of the 550th theaters in the entire United States under the AMC brand, our 3 highest grossing theaters were Burbank, Lincoln Square, and Empire, the very 3 theaters where we installed this new luxurious leathery seat that's wider, that has more padding, that rocks, and in many cases has more legroom. Knowing that this has been a successful initiative to date, we've already identified several handfuls of important theaters that are profitable and well attended, that should produce even higher financial returns for AMC if we can introduce this new seat type in those locations. We aim to deploy here, again, as soon as growth capital becomes available to us such that we can invest to upgrade these theaters. Additionally, with respect to AMC's Go plan, it also includes our focusing on several exciting new innovations in our loyalty, subscription, and other marketing programs. To that end, on January 1, just several weeks ago, AMC launched our 4th and newest AMC Stubs loyalty program tier called Premier Go. It offers heightened program benefits, it's free, and this loyalty tier is designed specifically to incentivize our current AMC Stubs Insider tier members, who also enjoy free memberships, to patronize AMC more, to buy more movie tickets in our theaters and buy more food and beverage at our theaters. Premier Go status is earned when a consumer sees at least 8 movies at AMC in a year or earns at least 5,000 AMC Stubs points in a calendar year. We started on January 1st, 2025, with more than 300,000 moviegoers already enrolled in the Premier Go tier as members because we based their membership on their purchase history with AMC last year in 2024. We have also announced that we will be enhancing other benefits for our AMC Stubs members, especially those in our A-List program. In this case, we intend to give more value to our most avid moviegoers who average somewhere between 24 and 32 visits per year at AMC theaters in the United States. How are we improving A-List? First, we have increased the weekly movie limit for A-List members. They can now watch up to 4 movies per week, up from the current 3 when the new A-List innovations take effect on May 7th. Second, to encourage more family moviegoing, we will be lowering the minimum age to sign up for A-List from the current 16 to 13. Why did we pick 16 previously? Because to prevent fraud, we needed a state-issued ID, which takes us to the third improvement to A-List. To make A-List membership verification easier and faster at our theaters, A-Listers, beginning May 7, will be able to upload their own photos to their AMC Stubs profile and use this in-app photo of themselves, the members, in lieu of having to show a state-issued ID. That's true with children as well as adults, so we can lower the age to 13, and we think more parents are going to cause more of their children to sign up in the program. In addition, on A-List, we have already announced that in May, we will launch a wholly new AMC A-List Classic program, a subscription program that provides for the watching of 1 movie a week, not 4 movies a week or 3, but 1 movie a week, and not good at all of our theaters, only at our AMC Classic theaters. But in doing so with these limitations, we have the opportunity to offer this AMC Classic tier at a significantly reduced monthly subscription price. A-List continues to be one of the most successful programs that AMC has ever introduced, and we think it will get better still with these changes coming soon. We have much more in store for our movie-going guests in the guise of more marketing programs designed to stimulate attendance, but we're not ready to announce them yet today, so look for more important marketing initiative announcements coming from AMC to be publicly announced in the coming months. For all the talk about pursuing growth initiatives, because in so doing we can drive increased financial returns and boost the value of the company for the benefit of our shareholders, I think it's imperative that I add that it is also of paramount importance to AMC, and nothing has changed, that continuing to focus on strengthening the balance sheet, to reduce our debt, to lengthen maturities, to keep our cash reserves robust, remains an extremely important objective for this company. The fact that we strengthened our balance sheet over the past several years is why we are still here, and we will not take our eye off the ball. At the same time, we also believe there's enormous opportunity to grow our EBITDA, to improve our financial returns, to benefit our shareholders if and as when we have access to more growth capital. That pretty much concludes the comments about the fourth quarter and some of the activity underway at the company. But before I close this call and move to questions, I'd like to close with just a special message to our retail shareholders, many of whom, thousands of whom, will be listening to this webcast. I want you to know that what I've said to you for years now remains true. Every day I continue to actively read your social media commentary, as it gives me a great sense of your views and lets me read the room, so to speak. Sadly, there's so much false information floating around AMC on social media. Similarly, there are crackpot conspiracy theorists, like one after another, that seem to delight in speaking foolishly about AMC. So, from the horse's mouth, here's some straight talk. Please know that I am acutely aware of AMC's share price decline over the past 3 years, and I am acutely aware of the pain that is caused for many of you. I am, after all, myself, I believe, the largest single individual AMC shareholder. I've been increasing my share position since 2021. And I am, after all, or was it January 22? Was it? What was my last sale? I forget. January 21? Or January 22? It's 3 years ago, right? Yeah, 3 years ago. I haven't sold a share in 3 years. Instead, I've increased my share position. And therefore, a share price decline that hurts you hurts me too. My interests are completely and directly aligned with yours. They are not aligned with anyone else other than you, and that is exactly as it should be. So think about all that I'm seeing, what you write and say. Here are 2 key thoughts. First, do not allow yourself to be distracted. Our biggest problem is not various market practices that some of you seem to detest. Instead, quite simply, it's that the movie industry and the movie theater industry has been in crisis for more than 4 long years. Domestic industry-wide movie theater attendance, believe it or not, is still down almost 40% from full year 2019 levels. That is a fact. And the fact that attendance is down means our ticket revenues will be stressed. The fact that attendance is down means that we will be able to sell food and drink and merchandise to fewer people. That is the problem at AMC. But I tell you that not as a bearer of bad news, but as a harbinger of good news to come. Because fortunately, as we have implemented one new idea after another, And as we have made our company more efficient over the past several years, AMC's profit per patron numbers are way, way up. We often see our profit per patron being as much as 50% higher than it was in pre-pandemic levels. So what that means is that for success, AMC does need the box office to be higher than it was in 2024, but we really do not need it to climb all the way back up to 2019 levels. And even more fortunately than that, the box office finally looks to be growing significantly and materially again. We are absolutely convinced, based on our expertise and our knowledge of what's coming, that the box office, industry-wide box office in 2025 will be bigger than 2024, and that the box office in 2026 will be bigger than that of 2025. But of course, no one has a perfect crystal ball. That's our view, that's our belief as of today. Only time will tell. The second thought I wanted to share is that some of you rail about the dilution of our stock, or with the perfect hindsight that comes from being able to Monday morning quarterback, the timing of the sale of our stock. Please know that we have only raised capital if the company truly and absolutely needed that cash to be in the drawer. Remember that many of our competitors, both big ones and small ones, both the most important ones and the most unimportant ones, so many movie theater chains have been forced into bankruptcy in the last 4 years because they ran out of cash. Not AMC. I repeat, not AMC. We stayed strong. We stayed alive. We stayed healthy. We stayed on a path towards recovery because of the actions that we took to bring cash in the door. Having said that, though, here is a pledge that I am making to you today. There will be no more cash raised from the sale of common stock in calendar year 2025 unless we first take that matter of authorizing more common shares to you, our shareholders, for you to vote and help us make such a decision. In summary, the entire team at AMC is absolutely committed to do all that we can to grow our revenues and to grow our adjusted EBITDA. We are constantly striving to enhance the value of our business, which after all is your company. AMC is the acknowledged leader of this industry. We have kept AMC alive and relatively strong in very troubled times, and we will continue to do everything humanly possible to keep AMC moving forward. And to that end, we just delivered one hell of a fourth quarter of 2024. Sean, let's move to questions both from our securities analysts and from our retail shareholders.
Thank you. We'll now be conducting a question and answer session. If you'd like to be placed in the question queue, please press star one on your telephone keypad. One moment, please, while we poll for questions. It's star one to be placed into question queue. Our first question is coming from Chad Boynan from Macquarie. Your line is now live.
On for Chad. Thanks for taking our question. So on the AMC Go plan, if the number of wide release films and the box office growth materializes as you expect, is that when CapEx will rise to the $375 million or so annual level implied by the high end of the CapEx range? Or, is there anything else you can share in terms of further visibility for the magnitude or cadence of the CapEx deployment? Thank you.
I'm happy to respond, Chad. Our CapEx budget is going to stay around $200 million, plus or minus a little change. until such time as we have access to growth capital. And how we have access to growth capital is something that we are sorting through right now. There are a number of really creative ideas in place inside the company where we might be able to get third parties to finance some of our growth. There are other opportunities that are so obvious. The returns on some of these growth initiatives is so high that we'd love to be able to convince people to trust us with more growth capital. But until we have access to growth capital, we're going to keep CapEx tightly constrained. The time will come when we can grow it, but you'll know it way in advance. We will flag it in advance. We're not going to surprise you with big CapEx expenditures without having told you prior to doing so.
Understood. Appreciate that. As a quick follow-up, IMAX recently announced a deal for the movie Narnia to have an exclusive theatrical run, and I think this is a film that otherwise would have gone direct to streaming. So just curious to hear your thoughts and your views on the potential for more deals like this to come through and how you see the dynamic between streaming and theaters evolving from here. Thanks.
So there are streamers and then there are streamers. There are some streamers who have actively embraced theatrical releases. Apple and Amazon come to mind. And we've had superb meetings and conversations with both Apple and Amazon. We're highly encouraged, for example, that Amazon, which is a combination of Amazon and the old MGM, announced just a week or two ago that they were staffing up and boosting their distribution personnel with significant numbers because they would like to dramatically increase the number of films that Amazon is releasing. Doubling, even potentially tripling. We're not quite tripling, but more than doubling the potential releases coming out of the Amazon sphere. Similarly, Apple is so excited about the movie F1, which is coming out in June, which they're hopeful and we're hopeful is going to be a major blockbuster, gangbuster hit. It's directed by Joe Kosinski, the director of Top Gun Maverick. I believe it stars Brad Pitt. Apple is behind it completely. Being distributed in the U.S. by Warner Brothers is behind it completely. AMC is behind it completely. So the notion that some of these streaming services might actually embrace theatrical releases is something that's quite exciting to us. I think that as the industry experimented with all sorts of different release patterns post-COVID, a general consensus has emerged in Hollywood, not by all, but by most, that the most successful movies on streaming platforms are those that go to theaters first. And those movies that have a great theatrical release often wind up being the most watched movies on streaming services. Not all. You notice that there is another major streaming service that I talked about, that I did not talk about yet, that is not as enthusiastically embracing theaters, that being Netflix. But we continue to reach out to Netflix. And right now, Narnia is scheduled to play on AMC's IMAX screens. We would love to be able to convince Netflix that they're embracing theatrical releases is good for them. They did it with Glass Onion. They are doing it with Narnia. We'll see where this goes. Narnia is still 2 years away. But having said all that, I have always believed that the world of the consumer's appetite for entertainment and amusement is so voracious that it can support both a robust theatrical industry and a robust streaming industry side by side.
That's perfect. Thanks, Adam, and congrats on a great quarter.
Thank Thank you. I'll turn the call over to management for retail investor questions at this time.
Thank you. So the first question that we have is about our merchandise and movie-themed collectible items and how that is going, and if we can give the investors an update on that.
Thank you, Sean. One of the things I said in my prepared remarks was that AMC has been implementing one new idea after another. And not all ideas work, but a lot of them have. And one of them that clearly has worked and worked unbelievably well is movie-themed merchandise. 3 years ago, and it's working, by the way, not only in the United States, but also in Europe. 3 years ago, we didn't sell any movie-themed merchandise in our theaters. None. In calendar year 2024, we sold about $65 million of movie-themed merchandise from nothing 3 years earlier. And the profit margin on this movie-themed merchandise, not exactly, but it's in the neighborhood of 50%. These are good margins, as they were great margins as they were if you were in Shark Tank. These are really good margins, and we're selling a lot of merchandise. And one of my goals for 2025 is to see what we can't do to significantly increase our merchandise sales for the fourth year in a row. And it should actually be easier to accomplish than it may sound, because number one, we've been increasing the number of movies that we do this movie-themed merchandise for. It started out that we were only doing a handful of these a year, and now seemingly every couple of weeks we have a new movie-themed product coming out. But people didn't want to get stuck with excess inventory. So, especially in the early phase of this merchandise ordering, you got to buy the merchandise from where it's manufactured like 9 months before the movie comes out. So we would place orders for merchandise and then have to get it to hundreds and hundreds of retail locations around the country. And there was no ability to increase the supply of fast-selling items. Whatever you ordered 9 months before, once it sold out, you were sold out. We were finding ourselves in 2024 often selling out on Friday or Saturday of opening weekend of everything that we'd ordered for a movie. And when I say everything, I don't mean small quantities. I mean quantities in the hundreds of thousands of items. And so one of the things that we've decided to do for 25 is to increase the quantity of the merchandise that we order in advance so that we have more supply in our theaters, so that we don't sell out on Friday or Saturday, that maybe we have supply through Sunday, or maybe we have supply through the second weekend. But I do believe that our ability to continue to drive our merchandise business is one where we ought to be able to succeed handily.
And talking about...
Before I go on this one, and your question was about movie-themed merchandising, but talking about movie themes, we also have movie-themed drinks now in our bars. And just like we have more, and we used to have a few a year, but just like we have more and more movie-themed merchandise in our theaters, we now have more and more movie-themed drinks. And often they're our most successful item at the bar. And so we're also looking at ways, including new beverage pouring technologies, where we can increase the number of movie-themed drinks that we have available, because people clearly are buying them. And remember how important food and beverage numbers are to us. Our food and beverage numbers for the fourth quarter were the highest they've ever been in AMC's 105-year history. So this notion of being creative and imaginative and innovative in what we sell to our guests in our theaters is of crucial importance, because it drives increased profitability.
And talking about food and ancillary revenue, there's a question about popcorn. And our retail popcorn initiative.
So I've got to say, I'm so proud of what we've done in taking what's called AMC Perfectly Popcorn into the home. This started only not even 2 years ago. 22 months ago, I believe, when we launched AMC Perfectly Popcorn at 2,600, I think, close to it, plus or minus 100 Walmart locations in the United States for our ready-to-eat popcorn, and about 500 Walmart locations for our microwavable popcorn. Believe it or not, as a movie theater company, we have chefs, both for our dine-in theaters and even for our concession stands. And our chefs worked extremely hard and almost for a year developing the recipe for the home popcorn line so that it would taste like theatrical popcorn that you get in our theaters if you made it yourself at home or ate it yourself at home. And they succeeded. Fast forward 24 months. In calendar year 2024, our popcorn sales doubled compared to 2023. What's more, the distribution of our store counts greatly increased. In 2024, we added Kroger and Publix and Meijer. For 2025, we've added what's called Associated Grocers, which wholesales food product to regional and local markets and smaller chains around the country. As a result of all that, our home popcorn line, which launched in round numbers, 2,500 stores just 2 years ago, by the end of next month will be in 11,000 retail stores in the United States. And I'm especially pleased. Walmart is such an important player in the grocery space. And I'm just so pleased that Walmart informed us a couple of months back that they were going to more than quintuple the number of Walmart stores carrying our microwavable popcorn line. So I think we went from 500 Walmart stores carrying the microwavable line to 2,700 by the end of April. This is all quite encouraging. It's very hard to launch a consumer product in the United States and do so profitably. And I believe where we are now is cumulatively, our Perfectly Popcorn line cumulatively is profitable and currently profitable. And we are highly confident that it will continue to grow in sales as we go forward. We've already established we're one of the best sellers in the popcorn category. And by the way, we just launched a new flavor, cinnamon butter, for those of you who like it slightly sweet. Anyway, I think popcorn's been a smashing success and more to come.
Question about our studio partners and windows. Do you see any opportunities to negotiate longer windows for our theatrical movie releases, and how might that impact the business?
I sure hope that we can introduce longer windows, because I think that the current industry experiment on windows has failed. Just a little history for those of you who don't know. Prior to COVID, in the United States, it varies by country outside the United States, but in the United States, movies typically did not get to the home until 74 days after initial theatrical release. The industry then COVID came and everybody experimented with all sorts of everything. Movies were going to the home the same day they were being taken to theaters. They were being taken at all sorts of different dates. Big movies, maybe a little slower, but not so big movies going to the home faster. The end result of all of that, and it's not all because of windows, but if you look at our industry's attendance across the entirety of the industry, it's still 40% below pre-pandemic levels, not quite 40%. The last number I saw was 38%. It's still almost 40% below pre-pandemic levels. That has stressed the EBITDA generation of theaters, that has stressed the profitability of theaters, that has stressed the share prices of theaters, and it's a problem for theaters. Now, I said Windows was not the only problem. There were other issues, including that Hollywood was releasing fewer titles. That appears to be changing. Hollywood is releasing more titles. But as the industry experimented with a whole bunch of variety of options, what the industry coalesced around was that the old 74-day window would become a 45-day window. So that movies would go to the home about 6 or 7 weeks after they hit theaters, not 10 or 11 weeks after they hit theaters. And some movies have gone to the home even quicker, 30 days and 17 days. In our view, 17 days and 30 days are too short. And we would like to convince all the major studios that they should keep movies in theaters longer. And this is a conversation that is front and center live. I was in the office of the CEO of one of the major 5 studios just 2 weeks ago, and he told me how important it was to reestablish the 45-day window as being sacrosanct. I was with the president of distribution of another major studio, one of the very largest, one of the most important, who was bragging to me that whereas other studios were keeping their movies in theaters only 45 days before going to the home, that studio was taking their big movies to the home only 60 days after the movies were released theatrically. So these conversations are live right now between theater chains and studios. We believe that theater chains would generate more money if windows were longer, but we also believe that studios would generate more money if windows were longer. Why? Because they would gross more in theaters, and the more successful the run in theaters, the more successful a run they're going to have when they finally take movies to the home. So watch this space. We'll continue to see what we can do to convince the industry that it should be firm around this 45-day number. And once we get there, maybe we can extend it to 60 days or 74 days like it was pre-pandemic. We will all learn together, but this is a very live industry debate topic right now.
Thanks, Adam. And I think we've got time just for one more question here, which is very related to what you were just talking about. When you think about the box office, how are you thinking about when the industry might reach more of a steady state level and return closer to pre-pandemic type of levels?
So, take you all back in time. Prior to the pandemic, for 5 years in a row, the industry box office was between $11 and $12 billion. This is the so-called domestic industry box office. This is all theaters, all movie theater companies, all chains, all locations in the United States and Canada, the basic measure of our industry. For 5 years in a row, it's been $11 and $12 billion. For 11 years in a row, it was between $10 and $12 billion. COVID comes, it's $2 billion. That was 2020. Then in 2021, it was $4.5 billion. Then in 2022, it was $7.5 billion. Then in 2023, if you exclude the Taylor Swift and Beyonce movies, which we sort of created out of thin air at the last second, which were not expected, did not come from a studio and were not expected to be movies in theaters, the industry box office was like 8.7 or 8.8 billion in 2023, and it was 8.75 billion in 2024. So the box office was flat. It had been high for a decade, went to next to nothing with COVID. It started rising again. It flattened out in 23 and 24. Why did it flatten out in 24? Because of 5 months of actors and writers strikes that crippled production of movies and decreased the number of film releases in the first 5 months of 2024. But that's the past. Let's look at the future. I said in my prepared remarks, we think the number of wide release films is going to increase in 25 over 2024. We have studiously looked at this movie theater slate of the titles that are coming out. And it's one blockbuster film after another blockbuster film, after another blockbuster film, after another blockbuster film. We really do believe, and as I said, nobody's crystal ball is perfect, but we really do believe that the box office will be, in 2025, will be somewhere between $500 million and $1 billion more in 2025 than it was in 24. And we looked at the movie slate in 2026, and it also was wonderful. So we think that the box office in 2026 is going to be bigger again than it was in 2025. So honestly, I hope that the movie theater industry box office does not peak and go to a, quote, steady state. What I'm seeing is that the industry box office is actually growing and growing significantly. It's going to grow big in 25 over 24, we hope. It's only February. We'll all find out by the end of the year. But we're pretty sure that the box office will be a lot bigger in 25 than it is in 24, a lot bigger in 26 and 25. I would hope that it's bigger in 27 than it is still in 26. Success breeds success. The more movie-going there is, the more profitable movies are. The more profitable movies are, the more that studios will want to make more movies. The more movies that studios make, the bigger the box office becomes. So there you go. That's a circular loop on the road to recovery.
And I think that's all the questions we have time for today.
So everybody, thank you very much. We had a very good quarter. The year 2024 was very good if you only look at the second 6 months of the year. But the second 6 months of the year looks to us to be a harbinger of what's coming in 25 and again in 2026. So I have one simple request. I don't know what you're doing this weekend, but why don't you go to a movie theater and go catch a movie? And when you do, we'd be happy to welcome you at AMC. Or if you're in Europe, Odeon. Or if you're in the Middle East, AMC Cinemas. Thank you, everybody, for listening. Thank you for joining us today.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful day. We thank you for your participation today.
All right, let's just real quickly. We're not doing anything particularly profound with the chart right here. I'm just recharting on the big picture because I just want to see the importance of these levels is really a matter of opinion. I wanted to see just to double check and make sure there's something that was kind of interesting while we were talking. Was it kind of consolidated around halfway between the bottom and the top of this move? And let's just call it, a pump or a flush, whatever you want to call it, both. Where it dropped off was this like 330 area, and then it kind of did like a quick whip around that target. And I thought that was pretty interesting. And I was like, I want to see big picture what's going on here and why that might be used as kind of an anchor. And so I was charting it, and I know my initial thoughts about earnings is kind of more of the same. I don't feel there was anything overly positive or overly negative. More of the positive had to do with paying off some debt, pledging, I guess, to not raise more money. Like, I guess you're assuming that you don't need it through share offerings. But, we'll see. We'll see what happens. You never really can tell with these things. And I'm thinking right now that you can see the way in which this is trading. This had some decent strength behind it. You see the volume on the front end of this kind of head and shoulder pattern. Decent buy-in here, and then it kind of wanes. Obviously, we knew that the volume was coming down, and that was consistently the case until it finally broke down over here around 350. But notice the overall kind of wave pattern is gravitating along this guy. And I guess I could color it different since it's not like the others. It's not a trend. It's really more of a center point. And we've seen before that when we can kick off of that one way or the other, we get pretty big moves. And most of it's been obviously away from it. So in the past, all during this region right here, these are really strong moves like away from that marker, and that's this kind of the center mark, I would say, of the overall kind of, I would say, the original creek that we've jumped and then lost and so on and so forth. It's really just become sort of an interaction at this point with basically like a wave center. And you can see that when we did have that one time that we jumped over and pushed off, it was pretty strong. Everything in here just kind of suggests a distribution and then the whip back around. And again, now you're back to kind of where we were before. And using this stuff as a model is not necessarily going to yield like everything you need to know. Obviously, this is just part of the interactions. But the way I see it, it seems pretty straightforward. That's going to be the most critical level. And when you look at the big picture, where we are currently sitting kind of on the top that we had back in May, and then where we need to be, which is right up here around 350, there's a lot going on in this interaction right now. And I want to say that it's kind of iterative, like there's a walk down here and then a build out and a walk down again that looks pretty much the same. But I don't want to get too in the weeds about this. If it's the same, then it is at least to some degree bullish up to about 428, because this did break out and come back to the top of the drop off. And that would be for us coming back up to 426, I had found 426 via the inverse head and shoulder. It was the inverse head and shoulder target. But 426 may actually be more significant than that. And there's a lot of reasons. I mean, I was doing the chart while he was talking. You probably saw some of it. There's a lot of reasons that might be a very significant level. I had probably would have said 430 before, but I think it's that new bottom that was made probably was solidifying this as a more important level. And, we can split hairs if you want. It seems pretty obvious, though, that like we found earlier today, oddly enough, we were kind of looking at this from a more of a micro view, and we were finding that in order for us to run, we would have to deal with 367. It's really interesting to me because I'm charting just like kind of a bigger wraparound here, and I'm like, yeah, technically it already did the wraparound. If we're looking at it from the point of view of, again, where is that creek? Where is that center of this wave? It's already done. Like it came down, it found the center, right, and then it dropped again, and then this would be like a reaction back to the center. Now, it went beyond it. What's interesting is that the first thing that happens after it goes beyond is then the resulting action is all distributive. So after the volume dropped off and it went back through, you can see very clearly, like clear as day, that we have nothing but wicks over top that marker now. So that's just to say that like bears, shorts, whatever you want to call them, that this particular region, which was contested, is currently still contested and it hasn't broken. And it doesn't surprise me at all that then coincides with what we would need to see, right, which is a jump above and a push above into this little pocket region right here. What I suppose is most concerning to me at this point in time is this little wick. It's all extended hours anyways, right? But ultimately, the price came back down and closed beneath. Well, that's not good enough, right? We need to see during regular trading hours, we need to see it push up, ideally above here, and really needs to sit up about 350. And ultimately, whether it gets there this week or next week, it has to do that if you're going to see a bullish price action. There's no question in my mind. So I'm looking at it like I was expecting there to be some kind of a push here. I don't think that's it. I don't think it's over and it's going to just dump. Although I guess if it did, it could be pretty nasty. We could be going back down to the floor at 296, maybe to get 292. I don't know. And get that fill. I'm not sure. But if that were to happen, we'll cross that bridge when we get there. But in the meantime, just from the way that I would look at this from a technical perspective, this wave reversal, this kind of rotational symmetry is basically done. And what you need to have now is you need to have this inverted head and shoulder kind of finish. And ultimately you can see like these levels are almost perfectly set up where you've got to get from, and I kind of showed it right here, one to the next. And each one of these, you see how this is like a breakout. Well, that's also the top of the shoulder at 377. So it's from 367 to 377 is the area you would have to make some kind of an advancement. And then, basically that's your head and shoulder finishing. And then you also have to break out, so you'd advance back up and you would see it's a breakout of this kind of downward channel, which isn't the strongest channel. But again, I think it's a pretty straightforward setup. Also confirmed here again, the 326. There's just no doubt in my mind, like that's going to be a stopping point, or excuse me, the 426. Not only is it a previous bottom, it basically signifies the middle of this macro range that's been built. I know I didn't use absolute bottoms. I didn't use absolute tops. That might confuse you a little bit. Really looking at this entry area and considering like that, yeah, there may be like a separate one that we could use from here down to here, and it's probably going to be about the same, right? So this is like an extended range where this top area and this bottom area are just kind of, I don't want to say they're superfluous, they're not, but they're extra, right? But you see like that middle right around 4, and then where have we predominantly traded? It's really not this bottom or this top. And I think that's pretty important because if you look again at that big picture, it's like, yeah, there's probably a way for you to draw this range significantly larger. And again, I've argued that we probably do end up trying to test low. Just like we did here with these tests high, we're going to probably do some kind of test low at some point, and that's when it comes down below to 250s area. I think that's likely based on what we know about AMC and the way it moves. But in the meantime, you can see that most of this is an interaction in a much tighter region. It's not quite as extreme as we may believe it is. It's actually not that far apart. It's like $2 range. It just feels like it because we've been in in this kind of gauntlet for a while. You're kind of running through a bunch of axe blades and junk, and you feel like it's really bad. And you look at the overall picture here, it's essentially just a walk down from the top to the bottom of this range, and it would make sense to try and go ahead and go for a backup and check for a sell level here at 426. What makes less sense, and the thing that kind of, at least for me on my part, like I haven't really been able to reconcile just yet, what makes a little bit less sense to me is the idea that it would go way up to like the 5s or even beyond. So I'm not going to get to that at this point. I'm still of the same mind that we probably will get here, but 326 could be a problem. And one thing that I would note is if it doesn't go at 326, we may be talking about GME earnings way over here in March, where this could come back down and chop. Really, there's nothing preventing us from being down here till March, except for, what the operator wants to do. So for us to kind of assume that it's got to go right now, maybe not the wisest thing. I am bullish on it. I have call options. I'm not saying I'm not bullish. I would suggest that what makes the most sense to me is still very much the same in a larger regard, that we do see some kind of, push up here. And then, I don't think it's going to last forever. We'll see what happens. But part of me does go back to what we talked about early in the day today. And I thought it was pretty interesting watching that. And I was like, it wouldn't be that difficult to kind of drive this price back down repeatedly and do the same thing again and again. It kind of starts looking like what we did see back here, doesn't it? If we have something like that, and you guys are like, well, then we should just go to the moon, right? Maybe. But I'm still inclined to think we won't. But it would certainly make some sense if we had some, retracements from 367 instead, especially depending on how you want to measure this, as a corrective wave or whatever. So I think it's fairly clear that there's a possibility this is going to rise to 426 still. I think there is a definite worry that I still have, and nothing about what we saw changed what I charted earlier today, that the weakness that was seen here by dipping back below 320, even if it's just for a moment, defines like a new downtrend. And it does mean that 426, that's where the trend would intersect. So we could be in a situation where we don't actually get through 426, or excuse me, where we don't actually get through 367. I said that wrong. And that, again, it may be something that you're like, nah, we're going to blast through it, but don't take it for granted, okay? I said the same thing back here, don't take it for granted when we were at 370 that it was going to just keep going. It just doesn't need to do that all the time. And I would not be surprised based on what I'm seeing here from an iterative standpoint if we did get more chop than expected. Maybe we will rise into GME earnings, and maybe that's the way this goes, and then there's a rug pull later. And that's a possibility too. I don't really want to go through all these scenarios today, but that would be like over here. So that would be this idea that maybe it does chop, but then at a later time we do get a rise, and it does kind of build out, sideways more and then up after a time. Beyond that, I don't think there's much else to this. I think it's pretty straightforward. If we were going to continue to kind of play on this idea of, wave analytics and stuff, it's almost too easy, I suppose, to make an argument that this comes back to 4, right? If this wave continues to kind of rotate, and you can see why, at the end of the day, maybe we're right, and this is part of it, but notice what happened here, right? After the backup, it then advanced, and you guys are like, backup? Well, it's backwards land, right? So if you really want to keep the rotation going, that's something that we could consider as well. Like that maybe this is part of that rotation. I don't know. I don't really like to overthink those kinds of things. I mean, we could chart it out. What that would imply is that at the next move, you'd have some kind of a breakout, and that move would probably only go, in this case, you can see it went like slightly above the previous. That probably would go to like a little bit beyond the top here to like 380, but then it would back up, right? And it could back up pretty far. And then again, we maybe break out later in March, maybe later than expected, and rise into GME. And this has happened before. We had something very similar with FOMC where there was a rotation going on and all this stuff. And it was basically right around the FOMC day. It was building out to a particular time. This certainly looks to be the case. If you look at where that 50% is, it's that drop in volume right there in the middle between the two ears. It's really hard for me to unsee that, and I'm kind of inclined to think that this 367 might be problematic as a result. I wish it wasn't, but wish upon a star doesn't make a difference when the market doesn't care. Honey badgers don't care. So, we look at this and it's like, yeah, I totally could see if that's going to rotate and unwind those positions that this might be a problem for us. We may see something akin to what I'm kind of doodling on the screen here, and that could just be a rise into GME earnings. And you guys are like, well, then we rip, right? I'm not going to go any further than that right now. Because there's a lot of questions, but my short answer is no, I don't think we've ripped, because I think that this established a new downtrend. I think what's more likely is that this is going to cause some headache. We might get a higher high, but I think it's going to cause perhaps some issues. And I'm happy if it just goes all the way up to 4 right away, but at this particular point, I'm more inclined to think that it doesn't. and that we breach this creek, but then kind of retreat back to find support. It's probably going to also coincide with some sort of a cat ear thing here. Yeah, there should be a secondary trend that we're using, so that would be like a 50-50 kind of move to some degree over this 350 area from the bottom, and then we would come back down to 350, 348, 347, and then we would advance. And again, maybe this happens a lot faster, but really, like, looking at the overall picture here, the timing of this isn't exactly rocket science. I'm just kind of using equal part measurements. You're like, well, then it should already be there. Well, maybe it's going to be faster than I'm expecting. Maybe that 350 holds, and it's sooner than later, right? Maybe this does rocket up like tomorrow and then spends a few days kind of chilling out around 350s, and then it takes off kind of more or less to the upside. It doesn't look like a lot, right? But I've already said it, and I'll say it again. I think it probably goes to 426. So I don't think it's going to stop at 4. But that would be fairly sensible, and there'll be some chop, obviously, in here. I think that's a reasonable expectation. And that does put us out another month, which seems silly, but if you're not really planning on running it, then you can kind of take your time. That's the rotation anyways, measured out. So I think it's a fair shake, and it could be slightly different. But I don't think it's as likely that from this point forward it just rockets and goes to the moon, or even necessarily goes up to hit that gap. Because at this point, what again I would suggest to you, and I'm not gonna again go way beyond it, but is that this then takes some time to kind of build out back down. And I think it would make more sense at that point to come back down. It may not ever get back below the floor, but it should come back down regardless. And I think a big part of it is going to be coming back to test that lower liquidity. I just don't see why you wouldn't. Just like we did here, we tested high liquidity levels. I'm not sure why we wouldn't do it here. Without dilution on the table, it's not likely there's going to be some kind of huge catalyst event. So it's hard to say. We'd have to wait. At this point, if this happens the way I think it might happen, depending on how this sets up, we should have some other creeks to use. And I don't want to get, overzealous about downside or something. I've already said previously, maybe 226 ends up being really important for a number of reasons. But yeah, this is kind of where I'm at presently. And I think it's very likely that this is then used as a final catalyst for a drop. Just like it walked down from this one, you do the same thing again. Right? This walked down 2 layers. This could easily walk down 2 layers. So if you don't think it can happen, think again. I mean, it totally could. It's already done it once right here. We just do it again. We would do it steeper. It would be faster probably. So that's where I'm at with this. I don't think earnings itself was particularly bad. I think it was pretty good. And I don't think it was particularly great. I think it was okay. You know what I mean? Like it's really right in the middle. They've definitely done some work with the debt. There's been some positive things here and there. I'm not particularly upset by it or impressed by it. It's just sort of is what it is. That's all I got for you. And I'm just kind of looking at this, like thinking about the next step. Tomorrow on market open, I really want to see above 335. So like that's going to be the first big level here. First it's 335, then it's this red marker coming down. And we can use either or chart. They're basically the exact same anyways. But really want to see above 335. I've guessed that the market might turn around today. And I want to just kind of repeat that I wasn't completely wrong. And it was important what happened down here. So it's not 100% bullish. I got to say that, first of all. It was kind of a mixed bag at the end of the day. It looks a little bit like could be a flag, right? Which isn't always great. But it did jump this local creek, and the next step would be to come up to 217. This isn't the Russell 2K, it's the ETF. It hit the target I thought it was going to hit. So I'm overall like pretty happy with what happened here. The backup was decent, and then it kind of pushed away from the creek, and we'll see what happens. But in order for this to kind of continue, we've got to still get over a couple steps. And it's the same for AMC. It's got to get over a couple steps here, and I think it can continue. And this went down really fast. So another piece of good news here, I suppose, last thing would be to suggest that it also would potentially leave very fast. As long as there's not some kind of like massive flush that changes the bottom, I'm sure we'll find out in the morning. In theory, this should move pretty quick. I think we're going to see roughly this angle to the upside. So let's just take a look at that. That's 54 on this chart. Yeah, that seems about right. So, yep. Because you would like accelerate away from that and then like course through it. So you would have like a pump and then you would drop through that trajectory and react off of it. So you'd have some kind of sideways choppy nonsense over here, but then you would go up pretty quick and then probably come back through it and land on top here. And that would define that trajectory. Because remember, trajectories are not trends, not really. They're more just directional input. But that does work. So that's what we would want to see. So really going into the end of this week, maybe it's a huge day tomorrow, but I wouldn't be upset if it's not gigantic. As long as we come up to like 350 and then land on top of 335, I think we'll be in good shape to see an advancement. And then I think we're going to have an issue when we get back above 382. I'm very doubtful it just busts through that level. I think it's going to jump and then it's going to back up and be kind of ugly, probably for like a week or so until it makes its way across here. And like I said, it could be deeper than what I've drawn. I mean, I haven't really given it much more thought. I'm just kind of showing you like this is potentially where it's at, but really could go quite low after this push, just depending on what happens, right? We'll see. But I would expect it to be overall kind of bullish. And this does add to sort of the chart we had earlier. And what I would suggest to you about that, and you guys are like, well, what about that other one? That was like way faster. It was way faster. And here's the difference, right? In one of these examples, the chart moves at almost like a breakneck speed, and it breaks above here and comes all the way up to that 405 level first. And then it really could go extremely fast. That would be sort of a situation where maybe you do go all the way up to 5. If this for some reason jumps over what I call the ice and hits here and it does hold, then yeah, you could be looking at like a 50-50 swing that comes pretty far, maybe that 485 level. I don't think it necessarily goes way, way beyond. Maybe it hits that gap. I don't know. It does look really close, doesn't it? So that's the difference. One is below, backs up, and then it kind of rises. I don't necessarily think it has to be this slow. I'm just showing you this is a possibility based on a rotation. It rises to 426. The other would be like a really rapid fire push. And I'm skeptical of this, so I think it's less likely. Both of these do make sense if you look at the big picture in terms of like, where are you going? Why would you go there? It's not just because there's a gap here and there's a gap up there. Those are markers that are placed that institutions are using, obviously, to bait people either way. The same would be applied for the $3 gap down here. Again, we can see very clearly it's in this lower liquid bottom zone, just like the gap here and the gap here are in those two zones, which again define this range. Either one of these, this 426 or coming up to that top at like 515 would warrant, you know, a shakeout. I mean, it's a perfect place to take the stock if you're trying to enlist sellers or buyers. So it makes sense. Okay. Now from that point forward, I don't think there's much else to be said about potential from there, because really it's just a matter of opinion, whether you think it's going to go further or not. I don't really think we can accomplish all that in one night. So those are things that could be very important to the movement of this stock. Yes, I didn't look at EMAs. No, I didn't look at EMAs. No, I didn't look at Bollinger Band. It's late. We've got tomorrow. We'll check it out again. I think this is sufficient for now. So, in just looking at the overall picture, I think it's given me enough information to kind of just say, yeah, all of this sort of makes sense to me. And it's lining up quite well, quite nicely. It is going to be controversial, obviously, to talk about this potentially coming back down again, even after all of this. But I don't think this backup's happened, so I'm like, I don't know why you'd expect it to do this and then not at least try this area as a distribution. And that's part of this that I think a lot of people are not really interested in talking about. But I am, because I think that this ultimately, if it builds out longer, could be a boring slog down into May, and the expectation that it's just going to rocket. Well, look at where it's at going into like May to June over here. It's down to here like 226. It's certainly possible, and it would be in a better position to then take off if it did something like that. So I'm still bullish for the short term. I'm just not like hyper bullish. And I do think that it's more likely that we're going to see 426 than like 5s. But again, if you don't catch it in the morning or you just want to like peek at your phone every now and then, whatever you're doing, just know that once it gets above 340 area up to 350, it needs to then hold 335. I think that's going to be an easy enough way to sort of understand this price movement. And from then, I don't know exactly what's going to happen here, but I do suspect it's probably not going to jump above the top here at 384 right away. I think it will back up again. That's my gut, not necessarily like perfectly TA, but I'm just watching it, looking at that Friday, and I'm like, yeah, I don't know. I could definitely see it pumping into Friday and then dropping really sharply back to 350, getting ready for Monday. And then I kind of wonder if it has more chop going into, I don't know if it takes a whole week, but I guess it could. It just chops at 350 all week. It's kind of where it is. That'd be pretty close to, perfect in some regards. All right, I'm done. You guys have a good one. Bro dropped a superfluous on us. Hey man, language is important, dude. You gotta have good language, I guess. So some words are just great summaries of ideas. That's why I used it. I won't throw other bigger words at you if you don't like it. All right. Y'all have a good night. We'll talk to you tomorrow.